Hi, I'm Dr. Laura Jagged, and I'm back again with some more answers to your How to Life questions. Perhaps you've heard the terms good credit, bad credit, and credit score. But what exactly does that mean? In this Mominar, I'm going to explain it all to you. Let's start with credit score. This is a score that tells others how well you pay back your loans and bills. The higher the score, the better your credit. That's called good credit. If you have a low score, that is equal to bad credit. One of the easiest ways to find your credit score is through your bank. If you have an online account, you just log in, click on the tab that says FICO Score, and there it is. And it's a pretty good guesstimate. FICO stands for Fair Isaac Corporation, which is the company that developed this scoring model, but all you need to know is FICO equals credit score. You can also find your score through your credit card's online account or credit score services, which you can find online. Just Google Find My Credit Score, or you can buy a copy of your score directly from the credit reporting agencies by going to myfico.com. The score usually ranges between 300 and 850 and is calculated by using your credit history from your credit report. We'll talk about that more in the next Mominar. So what makes up your credit history? Well, primarily, it's how often you pay your bills on time. Also included in it is how much debt you owe, whether you've ever defaulted on a loan, which means you borrowed money and you just didn't pay it back, or if you've ever filed bankruptcy. The scores range from poor to excellent. If your score falls within 300 to 579 is poor, 580 to 669 is fair, 670 to 739 is good, 740 to 799 is very good, and 800 to 850 is excellent. A credit score is calculated to predict how likely you are to pay a loan back on time. Why is this important? Because if you ever want to rent an apartment or apply for a credit card or lease a car or get a home mortgage, or anything where you'll be making payments for money that you've borrowed, the company that's going to lend you this money or offer you credit or take a chance on you to rent their property wants to know how reliable you are. So you want to be as close to excellent as possible. Now, you can borrow money or get loans for things that you want if you have poor or fair credit, but you're going to be paying a lot more in interest rates or in deposits in the long run because you might be considered a risk. So what's the best way to get a good credit score? It's quite simple, really. Just pay your bills on time. Do not fall into the trap of easy credit or buy now, pay later. Do not buy things on a credit card if you do not have the cash to pay it back right away. Or in the case of a loan, if the monthly payments are beyond your budget. Even if you make minimum payments or partial payments on a loan, it's going to end up hurting you in the long run, and your credit score will reflect that. The good news is that a credit score is always changing. So if you have less than stellar credit, you can always improve it in a relatively short amount of time too. It just requires a decision, a plan, and discipline. Financial responsibility is a huge part of being a successful adult, and I talk about it a lot. Did you know that there is a How to Life podcast? There is. And I have lots of information on there that teaches you how to adult like a boss. I have done quite a few episodes on credit and debt and how to successfully handle your money. They are great shows with fantastic coaches that help you learn about these things so that you don't have to worry or guess about it. You can see all of the content I've produced on my website, howtolife.com. There are podcasts, Mominars, and even a few bedtime stories now and then just to soothe you. If you are liking these short tutorials on how to do basic life skills, please give it a like, share it, and subscribe to this channel. Thanks for watching, and I will see you in the next Mominar.